Once again, I welcome you all to yet another beautiful session of Xtrend Speed Live with my humble self, Sheriff Daramola, and I shall be taking you on a journey through the chart where we shall be evaluating price movements using chart patterns, trend lines, market structures, and we shall be using these parameters to identify potential trading opportunity as we head into the New York session. And at the same time, we are also going to be looking at the previous charts. We're going to looking at the previous pairs we discussed yesterday. We want to see how well they are doing. And then we will randomly choose some other pairs that we will be looking at after we are done. If you have any pair or commodity you think you want us to look at, you can feel free to drop it in the comment section so that I can squeeze it into my schedule for today. I trust you guys are pumped up for today. All right. Okay, David, hi, how are you? Okay, 605 is greeting everyone in the house. Okay, without further ado, let's dive into the charts and let's see what's happening. So the first pair we'll be talking about today is the UK US oil. And we had a very spectacular move yesterday. Price moved significantly well from right below our $101 area and moved about how many pips that is? Over 600 pips moved before we started seeing this move to the back up. And if you will remember vividly, during the course of yesterday's session, we saw this move. Price was right at this area. And I said if we see a retest of that channel, that's another welcome opportunity to take advantage of that move to the downside. So if you are taking that move, kudos to you. Well done for citing that opportunity. And now we are right in the demand zone where we expected our take profit target to be. And so what do we want to do at this point? Now that price has emphasized what looks more like the downward bearish momentum. So as we head into the New York session today, what are we going to be looking out for? Well, the first thing I want to observe here is that price is right within the demand zone we identified earlier in the week. Let's label this area for the sake of clarity. We have our demand zone here. Hold on a second. Let's place this right in the middle of this box. Okay. So we have a demand zone sitting right around here, which price is in right now. And one thing we want to be looking out for is this. Is price going to respect this demand zone? That is, are we going to be seeing price rally up from this area, or are we going to be seeing price break down this area to a potential further bearish momentum to the downside? Well, we want to be looking out for structures to guide our action during the New York session. So the first thing we want to be doing is this. We understand that we have this bearish trend line that has been holding price action in the last how many days that is? I think last 1 week now. It has been holding price action. If let me give you a visual representation of what I'm talking about here. So price tested this bearish trend line, came back down, tested it one more time, tested it one more time before we saw the breakout. Then price came back into that bearish trend line, came back up, and then we saw the breakdown of that bearish trend line. Now, to join the rally to the downside, there are two scenarios we want to be looking out for. The first scenario is this. Price is probably going to reject this bearish trend line to push price further to the downside, or we could see price go as far as coming into this one, do a reversal pattern, then send price crashing to the downside from that area. So this is the scenario we want to be looking out for, any bearish momentum henceforth. And what if price does not go back into this bearish trend line at this point? How do we intend taking advantage of a downtrend scenario? Well, that will mean that we have to scale down to a much lower time frame. And that means let's go down to the 15 minutes time frame. Let's see what's happening on the 15 minutes time frame. Okay, so on the 15 minutes time frame, despite the fact that price is within our demand zone, hold on a second, let's bring out our line chart. We can connect the series of higher lows at this point. And what are we going to be having? We're going to be having something like this. We have this temporary bearish bullish trend line. So in addition, so this is going to be our first parameter that will guide our action during the New York session. So what we want to be looking out for is this. The first scenario is a breakdown of this bullish trend line, a retest of structure for further confirmation. And when I say further confirmation, we are looking for reversal patterns on lower time frame. It could be your double top structure. It could be your head and shoulder pattern. And whatever that is, we're looking for that pattern on lower time frame, after which we join a decline to the downside. So that's the first scenario. So we want to be looking out for the breakdown of this bullish trend line. In addition to this bullish trend line, it's appropriate we have a key level that we will be working with. This is just to make our job easier so that we don't get caught up in a dilemma when price starts unfolding before our eyes. So we want to identify a key level that will guide our action during the New York session. And one thing we'll observe at this point, if we look at the structure here, if we look at what the structure around this area is giving us, that is this area between here, between yesterday's New York session and now, we can see that we have a structure around here which has been a supply niche around this area. We have a supply niche here. We have a supply niche here as well. And then we have one here. And then we saw a breakout of that supply niche, giving us a bullish potential. And then we have a demand area around this area. So one thing you will agree with me at this point is that this area that we've just identified here is a very strong determinant of price action in the past, as anytime price comes into this area, it either rejects it or it breaks through it. So what I want to be doing at this point is to connect the series together and be using this as our key level during the New York session. So let's do just that. We have around 96.5. Okay, $96.50 appears to be the most appropriate point here. So we have $96.50. And we would always give this a golden color to emphasize its importance. So let's label this key level at $96.50. So we have it, let's have it sitting right on the top of the key level here, and then bring back our candle chart. Very good. So we have this key level here at $96.5 area. One thing we want to be looking out for at this point is this. The first parameter is the bullish trend line, which I would love to extend a little further. I would love to extend it a little further into the future, as we want to see how price is going to play out around this area. And if you look closely into the key level, it also shares a confluence with the bullish trend line here, making this area more or less a very significant area we should be looking out for. Either a bullish momentum, that is price could continue to the upside from this area, continue to respect that bullish trend line to the upside before the downtrend continuation happens, or we might be seeing a outright breakdown of that key level, which also share the same confluence with the bullish trend line, then a retest of structure. It could be the retest of the key level or probably the retest of the bullish trend line, after which we look out for patterns on lower time frame that supports a trend continuation to the downside. So this is the first scenario we want to be looking out for. Considering the long-term bearish momentum here on the US oil, we want to be taking this first glimpse into the possibility that we could be having a bearish continuation from this area in the market. Now, the second scenario is this one. Despite the fact we're on a bearish momentum, remember, there is a possibility that we could see price respect that bullish trend line, break out of that bearish trend line, the red dotted line we can see on your screen, and then climb as far as into this bearish trend line here before we see the move to the downside. So for those who like scalping, you could take advantage of that using that bullish trend line as your guide. As anytime you see a breakdown, then you should know that that is a sign that price is moving against you. However, if price continues to respect that bullish trend line, then you want to be taking your scalping position and looking at probably how many pips that is from here to here. Hold on a second. From above this key level into this bearish trend line is 130 pips, and if it goes as far as this trend line, then that's you have around 350 pips to catch here. But left for me as a long-term trader, and considering the obvious that we've already made profit on this one, we want to be patient enough to see how price is going to play out, in the sense that we want to see price come back into somewhere within our golden zone area before we look out for a reversal pattern that will send price going to the downside. Now the question is, where is our golden zone area? Our golden zone area is between the 50 and the 78.6% of the previous impulse leg. So now the next thing is to identify where the impulse leg is. We have this bearish impulse leg that started at around $104.50. That was on the 11th of July, and we saw our price move significantly downwards into the $93.70 area. So what we want to be looking out for is a retracement of this impulsive move into our golden zone area, after which we look out for patterns that will send price going to the downside. So now bringing out our Fibonacci retracement tool and running it through that impulsive move to the downside, we should be aiming at between the 50 and the 78.6% as our selling opportunity zone from a long-term perspective here. So if we have somewhere around here, let's give it a yellow color as usual for our selling opportunity. So we have this area of our selling opportunity zone. Let's give it a green and let's place it right at the center of okay. So here we go. So that's it. So now that's what we have here. So on a long-term perspective, we want to be looking forward to price coming into the selling opportunity zone, where we will be looking forward to a trend continuation to the downside. And if you look closely into what the structure is, if you look at this bearish trend line here, this bearish trend line I just lifted up here, you can see that that area also shares a confluence with our selling opportunity zone, which gives us the possibility that price might come into this area to do that reversal pattern we are looking forward to before we take that bearish continuation to the downside. And now, with this insight, for those who are out there who do counter trend trading, you could be looking forward to taking advantage of that move into this area, where you look out for after which you take your profit around this area, and then selling momentum could probably begin from this area. So that is the second scenario we are looking out for here on the US oil. So let me come again to have a clearer picture of what I'm talking about. The first scenario is this one. We are looking for a breakdown of this key level. Hold on a second. Let me bring out this key level further out a little bit so that we can have a better perspective. Okay, so we have this key level here. Let me place it at the right hand side. Okay, so we have this key level here. So with the first scenario we are looking out for here on the US oil is if price breaks down that bullish trend line, which also shares a confluence with the key level at $96.50. Remember, we are not getting too excited at the sight of a signal. We want to be patient enough to wait for confirmation in the form of a retest of either the key level, the bullish trend line, or probably this bearish trend line, where we look out for patterns on lower time frame in the form of a reversal pattern that supports a trend continuation to the downside. So that is the first scenario we are looking out for here on the US oil. And the second scenario is if price continue to respect this bullish trend line, then we want to be patient enough to look out for price coming into the selling opportunity zone, where we look out for structures that will support a trend continuation to the downside. So these are the two scenarios we are looking out for, and you will agree with me that the major perspective, the major buyers we are looking out for on the US oil is a bearish momentum. But within this perspective of a bearish momentum, those who do counter trend trading could probably take advantage of that bullish momentum from above the scale level if it happens. Mind you, if it happens, you could be having around 350 pips to catch before the move to the downside. But if that does not happen, then a breakdown of that bullish trend line, which also shares a confluence with the key level at $96.50, will be a retest of structure with a confirmation on lower time frame, will be the most right appropriate place to take advantage of a bearish momentum. Now, if this has been determined, our take profit target still remains the extension of that impulse leg. If we have this, the impulse leg we saw earlier, so we want to be looking forward to the extension of this impulse leg. So the only way we can do that is to bring out our Fibonacci extension to run it through that previous impulse leg, and the only place we will be aiming at is right between the 127.2 and the 1414 area as our take profit target, which falls within let's see, between the $89 area and the $90 area. So let's see how price is going to play out during the New York session. With the take profit target, if we are taking advantage of from below the key level here, we should be looking at least a minimum of 500 pips to catch here. And if price goes up a little bit into the selling opportunity zone we identify as the $100 area, then we will be aiming at around at least a 900 pips to catch here on the US oil. So I would like to pause at this point and let's see if if there's anybody in the house who needs further clarifications, so that I can quickly do that before we move on to the next pair. So I'll be pausing for, let's say, 10-15 seconds and run through the chat to see if there are questions or inquiries in this regard.